One of the things I've learned in 30 years as an investor is companies that have a culture of growth typically continue to grow. But when you get to that point where you're stagnating, when you're not growing faster than inflation, when you're not innovating anymore, that's when companies really get stuck in the mud. So one of the really interesting earnings reports that I was looking forward to this quarter is Zeta Global. This isn't a company that I've covered a lot here, but it's one that I'm going to be covering likely more because it is a steady growth company growing in excess of 20%. They have high goals for Zeta 2028, which is what they're calling their long-term growth targets. And they continue to streak of beating and raising estimates and guidance in the fourth quarter of 2025. So let's dig through the results and why I'm so impressed with this company. My name is Travis Hoyam. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. Let's first go through some of the high-level numbers. And you can see here, this is typically what they go through each quarter. Durable, predictable, profitable growth at scale. 25% revenue growth for the fourth quarter of 2025. For the full year, 30% revenue growth. This has also become a pretty solid operating margin business. I'll get to some of those high-level numbers and give some historical context in just a second, but cash from operations, $199 million in the year and $64 million in the most recent quarter. This is all quarterly numbers for Zeta, and you can see Q4 is typically the best quarter that they have. It makes a lot of sense. There's a lot of holiday spending going on in the fourth quarter, and the big brands that they're working with are likely going to spend more of their money in the fourth quarter than the first quarter. That's why you get these peaks in the fourth quarter. But you can see this revenue growth has been consistent. Yes, it's not 50%, but what was happening in the fourth quarter of 2024? That was political ad spending. And that's actually one of the big categories. They oftentimes report their numbers excluding political ads. So that's why this is a bit of an outlier. We're likely to have a little bit more of an outlier in 2026. We got another midterm election coming. And then in 2028, that spending likely goes up again. We can see their growth metrics that you want to look at. How many customers are they interacting with? And this, what they disclose here is scaled customers and then super scaled customers, $100,000 in spend and $1 million in spend. The number of scaled customers was up 14% year over year, super scaled up 24%. The direct revenue mix also stayed essentially constant. So they've got two business models. One is a subscription model. So that's going to be kind of a fee per seat or number of seats for a business. And then they're going to have direct revenue. That's going to be when companies are actually putting their advertising platform to work. They're going to generate direct revenue and then calculate actually the ROI from that as well. So that's at about 3/4 of the business. And despite the fact that they're working typically with big brands, this is actually a pretty diverse business. A lot of consumer and retail customers, travel and hospitality, insurance, but there's a lot of different verticals that they're working with. And now most of the Fortune 100 is using Zeta. This is actually even before the Athena launch. Athena could potentially take their revenue growth to the next level. That's going to be launching by the end of this quarter. That's what they said on the conference call. It's kind of in a pilot phase for a lot of their early customers right now, but that's something that could help drive the growth later in the year. But let's get to some of those long-term expectations, because this is what I mean by momentum and growth being in the culture of a company. So this is where you see the long-term revenue for Zeta and then also their 2028 targets. Keep in mind that Zeta typically sets these targets so that they can beat them by a pretty wide margin. So even the most recent update, this is an update after their Marigold Enterprise business acquisition. That was kind of a tuck-in acquisition for them, but they increased their previous guidance from $2.1 billion in revenue in 2028 to $2.3 billion in revenue and free cash flow of $371 million. So this revenue growth expected to go up, margin expansion expected to go from 11% in 2020 to 25% in 2028, and free cash flow target 16% of revenue. That's $371 million. As I'm recording today, the market cap for Zeta is just $3.7 billion. So right now, the company is trading for about 10 times expected 2028 free cash flow. And again, management typically guides a little bit on lower, knowing that they want to beat and raise those expectations in the future. So this seems to be one of the platforms that's going to be powered by artificial intelligence. And it's taking market share. It's growing in excess of 20%, now 25% in the most recent quarter. That's exactly what you want to see, especially in this highly competitive advertising space. They're showing that they get return on investment from those big customers, and that's what they're going after. They're going after whales. They're not going after small companies. So I think everything is moving in the right direction for Zeta. What's going to be important to hear in their next quarter is, how does the Athena launch go? How does that impacting customer spending? Does that mean they're spending more time on the platform? Is more of that direct revenue mix going to be something that's driving the business? They're not actually charging for Athena. It's just going to be something that is going to make it easier to generate that direct revenue in the future. Are there also other ways they're able to expand more in the advertising space? Remember, they're not making ads today. The advertising copy, the visual images, the videos, things like that, they're just placing them and generating return on the investment on where those ads are being placed. But there's obviously ways that they could expand that market as well. So Zeta, I think, really well positioned in the future of digital advertising. Their numbers continue to go up. The fact that they're raising expectations for 2028 just shows that the company is heading in the right direction, and it's a pretty good value for investors today. I love that you have all of the things I'm looking for: revenue growth, margin expansion, and the opportunity for multiple expansion in the future. But let me know what you think about Zeta in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.